Welcome to Illuminati Silver. We tell the truth about silver. Today is Sunday the 27th of February 2022. And earlier we produced our weekly gold and silver update and placed a link below. In this video, we're earmarking something that hopefully will be quite illuminating this week. Whilst the world, quite rightly, is focused on Russia and the Ukraine, this coming week we have a range of economic data coming out of the United States, including the very important non-farm payrolls on Friday, which will, in our view, finally determine whether the Fed is going to raise rates at its next FOMC meeting on March the 16th or not, and possibly by how much. However, what generally has gone unreported, at least until now, is the fact that Jerome Powell, the chair of the Federal Reserve, is giving testimony to Congress this week, which may also provide an indication of the Fed's intentions. Now, normally, and for good reason, many skip this monthly ritual. But this time, circumstances are quite different. There is more at stake, and we may be on the brink of a U-turn on monetary policy. So let's take a look at what Bloomberg reported on this just a few hours ago, and then we'll place our comments after it. Bloomberg article dated 27th of February 2022 at 7:58 a.m. GMT. Fed's Powell looks to balance inflation, Ukraine risks. U.S. central bank chief will testify to Congress over 2 days, weekly take on events in the world economy and their fallout. Federal Reserve Chair Jerome Powell must strike a delicate balance before Congress in the coming week as he aims to reassure Americans the central bank will confront high inflation. At the same time, war in Ukraine clouds the economic outlook. Powell will likely endorse recent signals from his colleagues that the Fed remains on track to raise interest rates in March. Still, Russia's invasion of its neighbor has injected a dose of uncertainty as the conflict contributes to additional price pressures that risk cooling demand. While acknowledging the precarious situation, Fed policymakers speaking since the conflict began have played down the grounds for delaying rate liftoff at their March 15-16th meeting, including at least one who favors a half-point hike if the economic data keep coming in too hot. Investors agree, with a quarter-point move fully priced in for next month. Data on Friday showed the Fed's preferred gauge of price pressures jumped 6.1% in January from a year ago, 3 times the central bank's 2% target, and the most since 1982. Officials get another important piece of evidence on March the 4th with the February jobs report. US employers probably added another 400,000 jobs, while average hourly earnings growth accelerated to 5.8% from a year earlier, based on median projections in a Bloomberg survey of economists. Surveys on manufacturing and services activity are among other key data on the agenda. Powell, whose nomination for a second 4-year term has been stalled by Republican opposition to President Joe Biden's selection of Sarah Bloom Raskin for Vice Chair of Supervision, testifies on Wednesday before House lawmakers and a day later to senators. Bloomberg Economics says, "We expect Powell to sound vigilant on inflation, but ultimately favor the gradualist approach to rate hikes due to the elevated market uncertainty from the Russia-Ukraine crisis. He will not provide an explicit endorsement of a 50 basis point hike for the March meeting in our view." Now, elsewhere, global policymakers and investors will be watching developments in Ukraine and their potential to derail an economic recovery already challenged by the Omicron wave. The Bank of Canada is expected to start a rate hiking cycle on Wednesday, and central bankers in Australia, Malaysia, Sri Lanka, Hungary, and in Ukraine itself also meet. Briefly looking at Europe and the Middle East and Africa, the Euro area's inflation reading for February, due on Wednesday, is set to show yet another record number. Economists predict the rate hit 5.4%. Price pressures are set to continue with Russia's invasion of Ukraine having sent oil prices above $100 a barrel for the first time since, yes, 2014, threatening an economy that's also suffering from supply shortages and lingering pandemic curbs. We all know that Europe has been more dovish than the US and the UK in recent months. The UK having already introduced 2 rate rises this year, and a third most likely in March. We tend to agree that we will have a 0.25% rate hike in the US in March rather than 0.5%, but the scene appears to be set to introduce more small rises than less larger ones. The impact on gold and silver prices will be interesting. If the economy is improving, we should see a rise in silver prices as demand increases for industrial purposes. However, there is also the possibility that its monetary demand may fall as other assets offering interest rates may become more attractive over time. Against this, we also have to weigh the geopolitical uncertainty and, of course, the effect rising rates may have on other competing assets such as equities and cryptocurrencies. We saw on Friday gold and silver dip after a strong rise following Russia's invasion of the Ukraine on Thursday. What perhaps was disappointing to many was the fallback, and gold itself having failed to reach $2,000, which many pundits believed was an almost certainty should an invasion occur. Even we thought that $2,100 was indeed a possibility, and whilst there is still time for that to happen, most agree there has to be a further escalation to push prices back up there, at least for now. So what do you think? Do share your thoughts and let us know how you believe what happens this week, and more importantly perhaps on the 16th of March if there is an interest rate rise, how that may impact gold and silver prices. Meanwhile, thank you so much for listening. Please, if you haven't done so, subscribe to our channel and press that bell sign so you're notified of our videos as and when they're published. And we look forward to touching base with you again in our next video. Now, before we go, just a quick shout out and links provided to 2 videos that we think are important, produced this week, very important perhaps, and that is our silver price forecast for 2022, published earlier in the week, and also the video we published on Friday, what is it going to take for gold to reach $2,000? And we've placed links to both of those below, in addition to the other videos we have already mentioned. Illuminati silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.